Hello guys, so there's gonna be a very brief lesson on Quasimodo pattern, and I guess some of you have already heard about Quasimodo pattern or QM pattern. That's what I'm gonna discuss in this lesson. It's gonna be brief, okay? So the QM pattern simply is a change of character, okay? Normal change of character that you know. For instance, price is bullish, and then we break down. So initially there was a breakup, and we have a breakdown. Okay, so this is how a Quasimodo pattern looks like. Okay, so the Quasimodo pattern has what we call the QM line. Okay, the QM line is the Quasimodo line. So the QM line is this point where this high that we previously had a manipulation above. That's your QM line. Then we have your breakup structure here. Okay, now this is the normal QM pattern. There is another QM pattern that has an MPL. Okay, bullish, bullish. And we first of all test this high, give just a tiny reaction and break down. Okay, so there's another form of Quasimodo pattern. This type has two characteristics. It has the QM line, Quasimodo line, and then this little reaction that you see here, we call it the MPL, MPL, maximum pain level. Okay, so there's a smart money trap. Retailers, retailers will want to buy resistance tend to support, right? So work that resistance price, test it. They're expecting this level to hold as what? Support. Give them a little bit of reaction, manipulate them, and break down. So we break structure down here. So this particular PM pattern has what we call the MPL, maximum pain level. So let me label that for you. ML, that's the maximum pain level. Okay. Okay, good. And then this red line you see here is the QML, Quasimodo line. Okay, QML, model line. And we have your break of structure here, perfect QM pattern. So for this one, we only have our QML and then our BMS. So let me label that QML. And we have our BMS, that's our break of structure here. Okay. So these two are what? Quasimodo patterns. Very powerful pattern. But as I said, it looks like the normal change of character or breakup structure that you know with a breakup block pattern. Okay. Now, just like we learned institutional reference points like the breakup block, fair value gap, other blocks, mitigation blocks, and what have you. Now, UML, this particular line is also an institutional reference point. This is an institutional reference point that you should know. Okay. Price can simply go back to that KML line, sell off. So that level is an institutional pattern. Institutional level, just like the other blocks that you know. And also the same with the MPL, the QM pattern with the MPL, very powerful area. Price can pull back to that level and sell off. So these areas are very powerful areas in price. They provide high quality setups, entries, very sniper entries happen around these areas. Okay. Now there's one thing that you can do as well. Like when price comes here, the QM line, you can sell straight away from the QM line and place your stop loss here. But one thing you can as well do is that after identifying your QM line, you can look for any institutional reference point above the QM line, whether it be an order block or a fair value gap. Just mark it. Sometimes you see that price will pierce or wick the QM line into that institutional reference point and sell off. This one already has an institutional reference point with this MPL. So this will be a smaller order block or a mitigation block at this support where retailers were trapped. price will use it. So if you have this pattern with MPL, the MPL level is where you go from, the mitigation block or the flip zone around that area is what you go with. If it is the normal pattern with no reaction around this area, we just broke through that level, then you mark your QML line, then above it, locate any institutional reference point above it, whether it be a fair value gap and other block, and then you can trade from it. This give very sniper entries. Now let's look at the charts and look for some examples. We're going to see collateral of them. So let's look at this one here. We have a current pattern here. Okay. So as you can see, we have the manipulation here. Okay. And we have the breakup structure to the downside here. Right. Now, when it comes to the QML line, okay, you shouldn't draw it from the wick. You should draw it with the candle with the highest body within that high that was manipulated. This is the high that was manipulated prior to the breakup structure to the downside. For marking your MPL line, you don't mark it from the highest wick, mark it from the highest body. So we should take note of that. So the highest candle body here, tend it to the far right. That's your what? QML line. Very powerful area, right? Now this QML line, this particular Quasimodo pattern also has an MPL, right? You can see all these rejections around this support level. We broke the support, sorry, we broke the resistance. See all this movement around this area. So that level is an MPL. This rejection block around this level is an MPL. Okay. So as I said, you can sell straight away from the QML line, place your stop loss above the high. Or sometimes price can wick above the zone above the QM line as your setup. Okay. So this the type 2 of the QM pattern that I showed you, the one with the MPL. In this case, price used what? QM line is perfect one, for example. Now let's look for some more examples. Okay, let's look at this one. So we have manipulation of this high. We have a break of structure down here. Very good. So this is the type 1. You can see that we didn't get any reaction. We just broke through that level. So this was not resistant 10 to support. So we don't have any MPL. This is just type 1. So manipulation here, break of structure here. Let's identify our QML line. So the highest candle body of the high that was manipulated right here, extend it to the far right. Okay. And as I said, after identifying your QML line, you can look for any institutional reference points above it. So we have a nice fair value gap here. That's an area you can sell from, or you can also just sell from the QM line. They're all perfect. As you sell from here, your stop loss is above here. That's it. Tank profits. Beautiful setups. So QML lines are powerful institutional reference points. Then above QML lines, you can look for institutional reference points as well, so that the zone will be nested for a high probability setup. Look for some more examples. So there was manipulation down here. And there is a break of structure to the upside here. Now let's identify our QML line. The lowest body, this candles is the lowest candle body. And that's time, and that's your what? QML line. So just below the QML line, and identify an institutional reference point below it. And we have this other block below the QML line. So your entries can come in two ways, and just buy from the QML line. Or if you want a really sniper entry, then you can wait for the institutional level below the QML line, just below. That was a sniper entry. Very sniper. Beautiful sniper entry. So we have an example here. Sometimes it takes a very long time before price comes QML line. Nice, it does take a long time. So we have a manipulation here. Break-off structure of these lows here. Let's identify our QML line. The highest candle body, extend it in time. As I said, sometimes it takes a long time for price to get there. And normally and always when price gets there, it will give a reaction. Very powerful institutional reference. So as you can see, price got to the QMO line. Could have sold from there. A stop loss above the high. Take your profit. You also have this order block. So 50% of that order block above the QMO line. That could have been your entry point as well. Or you could have even refined this order block on 15 minutes. Get a very clean zone, sniper entry. Simple as that. Now you have to be trading this setup with context. Okay. Your higher time frame level, which is the daily, is bullish. You want to be looking for 1 hour bullish Quasimodo patterns. Okay. I like to use this um in confirmation with my higher time frame order flow. If I'm bullish on the daily chart, when I see a bullish QM pattern happening, I'll take it with full confidence. But I don't like to take it against my order flow. Okay, very good. So we already know your daily order flows, how to trade the daily order flow. Touch with that. So you're bullish on the daily or bullish on the 4 hour, and you have a QM pattern forming on 15 minutes, 30 minutes, or 1 hour, confirming the bullish continuation of the daily order flow. Why not? You can smash it. Smash it. Okay. So we have smaller. Let me get rid of this. I have another pattern happening here. So manipulation of this high, right? And we have a break of structure to the downside here. And let's identify our QML line. Always identify your QML line first. So we have this QML line, extend it to the right. As you can see, above the QML line, we look for an institutional reference point. That's this order block right here. Send it, and that's your entry point. Your stop loss above this high, never taken. Have some profit to the downside. The entry, as I said, can come from the QML line straight away. The stop loss is above here. Entry can also come from this order block, either the open of it or the whole candle as your order block. Now, this area is also an MPL area. Okay. You can see that this resistance that was broken. Retailers will mark this level as resistance broken, turning into support. So price comes back to the resistance, gives them a bullish rejection candles. They will start to buy with their stop losses here. This all buying happening here is what? Smart money manipulation, the retail trap. We trap them, match their stop losses, and break structure to the downside. This whole reactions here that you see here, what is an MPL, maximum pain level. The reason why it's called the maximum pain level is because retailers have been manipulated. A lot of pain has been caused to these guys trying to buy from here. Okay, so normally price will come there and give some more reaction. Place your stop loss above the high, get your profit, and you're out. Now there is one way that you can use this QM pattern. All the examples that I showed you, they were examples that had a break of structure. Okay, but sometimes I take QM patterns even without a break of structure, and that is when example here I want to show you. And that's when I already know my higher time frame bias. Okay. If I know that my higher time frame bias, which is the daily and the 4 hour, is bullish, and I see a potential run or stops, okay, I could take that as a potential Quasimodo pattern forming. Okay. And I will be able to take the trade with confidence, even though I don't have a break of structure yet. And I'll show you how to do that. But with this kind, should be really confident with your bias. Other than that, you're going to get smoked most of the time. So let's get a clear bias. Okay, so there's an example here. So as you can see from this point, price was bullish, up, pullback, break of structure. So already we are bullish at this present time. So considering this current price action, we are bullish, right? And if we know that we are bullish for the long term, and I see this manipulation happening below this point, okay, okay, even though we have not broken structure to confirm the QM pattern here, okay, but if I trust my bias enough, as soon as we take the liquidity below this low and I mark my QML line, I want to see price aggressively break structure, break the QML line, okay. So as you can see, we took the liquidity below this low and we closed above the QML line. I am very confident to take the buy from the QML line, even though we've not broken structure. I'm very confident to take the trade from here, ride it all the way up and up, just because I am confident in my buy scenario and I'm trusting this to be a liquidity run. Now, how can you trust this to be a liquidity run? Let's say we have a daily chart. Let me give you a possible scenario. Say we are bullish on the daily. So the daily is bullish, right? And then on the 4-hour chart, you see small 4-hour structures form. Okay. This, since the daily is bullish, okay, you can track this 4-hour shift as a manipulation, leading price to the daily discount. And if price breaks above that QML line, that will be a potential long, even though we've not broken structure to the upside. Yeah. Daily is bullish, 4-hour manipulate high, then manipulates this low, right? So since we know that we are bullish, as soon as we manipulate this low, we are not trusting this as a bearish market structure break, but we are trusting that this low is just a 4-hour low liquidity or internal liquidity that price is sweeping into our daily range. Let's say there's a daily fair value gap, order block or breakout or something within here. We have a 4-hour manipulation of this low. Now, if I'm really confident about this order flow being maintained, then I know that possibly or potentially this is a possible QM pattern forming. And as soon as take the liquidity and break above the QMO line, which is the body with the lowest, the candle with the lowest body closer. As soon as we close above it, I'm taking the retest of that line as an entry point, ride the trade up. Okay. I will not wait even for break of structure here before I'll take the entry. This is the normal one, but I'm not going to wait for this if I am really confident about if I'm really confident with my order flow. This will be the entry for me. Let's find some more examples of this kind. Okay, and let me use a different chart. Use the 75. So I just shared this trade setup to the Signal group. We are very deep in profit. Yeah, congrats if you are in. So let's look at some examples. There's a nice example here. So here, assuming this is a daily chart, right? We have a big impulsive price movement. Price has pulled back, okay? And let's say price has pulled back to institutional reference point within this range on the daily chart. Let's say there's this order block, right? And we trust that this daily bullish order flow is going to continue. Then we can trust that this low that was taken just a manipulation and not a real break of structure. So we can mark the QML line, extend it in time, and all we are waiting for is price to close above the QML line and come and find support QML line for our entry. Take the longs, okay? Take the longs from here, stop loss just below the low. We expect this low to be protected, but this low has already cleared liquidity into our higher time frame level. Believe that it's gonna turn around. First target will be this high, okay? You can leave something on for the rest, okay? So we have one more example here. After taking this trade, let's say you know that you are still bullish. You know that you are still bullish. Another example here. There's a stop run of this low. But since we know that we are still bullish on our higher time frame, we are trusting that it's just a stop run into this institutional reference point, this decision candle, trusting that this is just a manipulation to this institutional reference point. Okay. So as soon as we manipulate the low, what we are going to do is mark our QML line, candle with the lowest body closure, turn it in time. As soon as we close above it and price come and test it, that could be your entry point, stop loss below the low. Expect this low to be protected because this low has already done its job by clearing liquidity into our higher time frame level. So we are using this higher prices as our higher time frame order flow, and this manipulation downward as a lower time frame break of structure, which we are considering as a manipulation. But the higher time frame is king. That's why I say you should always frame your setup from the higher time frame, at least the daily chart. Break it down to the forward. So you take this buy setup from the QM line. As we've closed above the QM line, your stop loss below the swing low. First profit is high. Okay, as simple as that. So that's all for this lesson. You need to backtest this, and you should only use this particular way where we didn't restructure, but you're taking entry, considering as a manipulation, taking entry from the QM line. You should take this particular type of QM pattern when you are really confident with your order flow. Other than that, you shouldn't take it because it gets smoked. You're really confident with it. Why not and go with it? Confident with your